Hello, I'm Nicholas Bohnsack, President and Head of Portfolio Strategy for Strategas, Baird's investment strategy arm. It's very good to be back with you again for this week. As many of you know, I've always been fascinated by investing and the relationship between the economy and the markets, between new ideas and time-proven staples. The Baird mailbox has received more than a few questions about these relationships over the last several weeks. And so to ask it plainly, why is the stock market up while parts of the economy still seem so weak? It's a very good question. And we know we can make the answer as complicated, contingent, and nuanced as we want it to be. But there's another way. And it really boils down to how we feel about risk, and whether we're looking at it from the vantage point of our own circumstances, what's in our own best interest right now, or more holistically, with a wider lens towards opportunities present for some larger constituency, our community, our company, or our country. Right now, as is so often the case when the recovery is just underway, the economy is grappling with high levels of unemployment, and this is even more acute today as whole areas of the economy remain closed while we continue to deal with the pandemic. It's why policymakers and investors have been so focused, as we've discussed the last several weeks, on fiscal stimulus. Dislocation in the job market puts strain on the system, and it creates uncertainty, perhaps for ourselves and certainly for the broader economy. It raises questions on how quickly we can recover to previous levels of activity and output. Without appearing callous, where this dislocation is actually helpful, however, is in the clarity it brings to the recovery of corporate profits. The more profitable our businesses, ostensibly the more innovative and focused on future growth they can be, and more dearly investors will value them. It's this looking ahead that creates the perception of divergence between the economy and the markets. And so what does this mean for our portfolio? While it's always important to work with your Baird financial advisor to see how it all fits into your financial plan, knowing that we have a plan that accounts for both where we are and what we need today versus the longer-term goals should let us shift our investment focus into the future. To leverage this concept, we've kept our Strategas balanced portfolios tilted toward an above benchmark exposure to equities and in favor of growth over value. We've also maintained a preference for large cap names versus small. But the quiet improvement of small caps in recent weeks has decidedly caught our attention. Part of this improvement is relative. It's due to the softness in the big five mega cap new economy names, but part is absolute, due to the market shifting its attentions beyond the election toward a strengthening economic recovery. As you can see in this chart, the general trend has actually favored small caps off the market's March lows. While tactical investors may have been quicker to jump into the trade, longer-term investors have waited patiently to know the recovery was firm. So we'll want to keep an eye out to see if the weight of the evidence continues to shift in favor of small caps. And this brings us to where we began our time, at the intersection between new ideas and time-proven staples, between an economy picking itself up off the mat and an expansion driven by organic drivers of growth. This recovery remains fragile, and so we need to be mindful of false positives and emerging trends. But two thoughts to consider. First, it's been 540 days since the Russell 2000 made a new high, and we've only experienced a longer stretch on 3 occasions in the last 40 years, trends that were broken following major recessions. And second takes us back inside the Baird mailbox and a good number of questions on the outlook for inflation, which we'll jump into in the weeks ahead. But as it relates to small caps, using data from the 1930s from the good folks at Ibbotson shows small caps to be the only major asset class to outpace inflation every decade since. So keep your eyes downfield, trust your plan, keep your questions coming, and we'll see you again next week. Have a wonderful weekend.